Thank you. Hello, testing. Yep, thank you. I think we've got distinguished speakers, specialists in family office here, and thank you for attending today. Let me have a quick introduction of the speakers. I think on the screen you can see Professor Dr. Heinrich. Professor Heinrich is actually specializes in entrepreneurial finance. He is a co-author on several publications on private equity, and also he lectures the MBA, Master of Business Admin, and executive programs. So welcome, Professor Heinrich. And also sitting far end from me here, we've got Jingjing Zhang. Jingjing is a partner of King & Wood, and he's also heading up the corporate and securities group of King & Wood in Hong Kong, and also running the funds coverage team. Apart from that, he's also the founding president of the Hong Kong Limited Partnership Fund Association. He's also acted as on both buyer and seller sides on large secondary transactions as well. So welcome, Jingjing.
Thank you.
Next to Jingjing, Simon Jay. Hi, Simon, thank you for coming. And he's an experienced entrepreneur with extensive knowledge in global financial and wealth management industry. Simon is also an advocate to the blockchain industry and cryptocurrencies. Mr. Jay also served as managing director of Infinity Special Solutions Situations Fund and multiple Fortunes 500 global corporates as senior executives. So welcome, Simon.
Thank you.
Next to me, my friend from Blue Pool. I'm sure most of you may know him already. Danny Lee. Danny is a partner of Blue Pool Capital, running global private investments. He has over 20 years of investment experience spanning venture, growth, capital, buyout transactions globally. And before Blue Pool, Danny was a managing director at Bain Capital Asia. Danny also is a guest lecturer for Columbia Business School, Ningnan University, and Hong Kong University Science and Technology. So welcome, Danny, to the panel. So I'm Dixon from Invest Hong Kong Family Office team. I'm the head of financial services and also the global head of family office. So today, family office in Hong Kong is growing and booming in recent years. And we have witnessed the changes over the years. In the early days, I think majority of the family office were embedded family office, which has the main framework attached to existing family business. So for now, most of the single-out entities that are totally separated from the family business as a separate, say, single-family office or multi-family office nowadays. So we will go through the impact of a family office, how it will bring to the PE and VC space and the landscape. We can now kick off the official question so that we will be talk about more on the impact of the family office, how it will embrace the PE and VC space. So the first question with the rapid growth of the private wealth in Asia countries, so especially in mainland China, why do wealthy families show an increasing interest in setting up family office and in Hong Kong and elsewhere, and what are the expectations? So I think perhaps this question, Danny would be the best place to answer that from a family office business perspective. Danny.
Thank you, Dixon. So I think everyone knows that with the kind of incredible wealth that everyone sees from companies going IPO in Hong Kong overseas, there's a lot of wealth being created. I think if you see Kuaishou's IPO, there are hundreds, if not thousands, of multi-hundred millionaires being created. There's a lot of wealth out there. I think for a lot of these individuals, and in some ways for us as well, setting up a family office means just having more control of your investments, your objectives, In a way, it's also a cost issue. I think if you allocate significant amount of capital to the existing channels such as private banks and et cetera, if you do the math, actually, it's, if you reach a certain scale, it's actually cheaper, to be honest, to have your own family office, to have people manage the money the way you like it to be. So, and then I think lastly, we think about legacy and how to manage the family wealth over multiple generations. I think this is the new topic for a lot of Asian family offices because it's actually very new. Ourselves is more of a first generation type of family office, but if you look at Europe and the US, there are easily 5, 6, even longer generations of people managing the wealth for the family. So sustainable management of wealth and family legacies is also another consideration.
Simon, I think from a family office association perspective, as Danny has highlighted about the succession planning, sustainability, wealth preservation. So what's your view on this as well?
I think more healthy families, individuals, they come over to set up the family office in Hong Kong or elsewhere is to have more professional to control their wealth. As Danny just mentioned about succession planning, we will need to have some more professional to plan different generations, how their wealth can be have a legacy for the future. And of course, in the period section, we talk about the ESG. That is another topic. So more professional on ESG will help the family office for investment. It's a non-financial factors impacting the future of their investment, how that will help them to shape their future. So that is, I think, from a family office perspective.
Thank you, Simon. So now we understand more, the expectations of the family office. So apart from financial, they're also non-financial. So my next question would be, what are the key factors for the family office to consider, where they should set up, the jurisdiction, the country. So perhaps Jing from a legal and also the talent pool perspective, you may share some of your views with us.
Thanks, Dixon. I think because family office serve different purpose. So I think the fundamental question you need to ask is, what's your purpose to set up the family office? And then you can decide what factors you need to take into account. But I think because family office is very highly customized service, a solution for the preservation of family office and the growth of family office assets. But generally, I think you need to take into account a few factors. I think that as a lawyer, I think the priority, probably the top one in my mind is, of course, you have a sophisticated and developed legal system. And I think that's the first thing you need to look at because that's where you put your assets there. And second of all, I think because it's a family office, so the purpose is to serve the family members. I think proximity to the family members should be also one of the consideration. Because I think if you set up a family office too far away from the family members, maybe it's hard to control, and also it will be less beneficial for the family members. And thirdly, I think the availability of those financial product and the connectivity to the global financial market is also important because, you set up family office to make investment, and therefore, of course, you need to have the access, easy access to those financial products. And finally, I think you also need the professional support like a legal, tax advisor, and other professional service provider. So I think those are the key considerations you need to think of when you go to before you set up your family office.
Thank you, Jing. So the financial support, the infrastructure, as well as the proximity to family members, these are the key considerations for family office where they should set up. So Dr. Heinrich, so from an academic point of view, are there any other factors that you would recommend to potential family office where they should be setting up?
So welcome here from Munich. I'm actually in Munich. It's a bit of an awkward situation because, not that because it's hybrid and I'm not with you, which I would love to be, but you have all your masks on. So I don't know, I feel a bit awkward to see you, not seeing your faces. I was tempted to put my mask on, but I'm alone, so no need here. As the previous speaker very eloquently said, most of those points are covered. I think indeed purpose is the most important part of it. And maybe just to stress the point that families are very, very different, right? So needs are different, objectives are different, and therefore, coming back to the service, to the purpose, the services of the family office have to be very different. And it's correct that it should be near to the family, speaking of a family office. But there is one more point I would really like to stress besides of the others just mentioned, and that is you need an excellent team. And you don't have necessarily the team where the family lives or what it would mean. So for example, private equity, there are very few hubs to speak of Europe, but I'm sure the same holds for Asia, it actually holds, is, private equity teams you cannot have in the midst of nowhere. So also think of how to attract the best team, which is probably the biggest challenge for family offices. It was said about costs before and so on. Private equity people can become really expensive. So that would be another very important point to add. And also, people often think of where to set up the structures, and then there comes a lot of tax arguments. I would not allow the tax reasons to override the above-mentioned far more important issues like purpose, proximity to the family, and so on. So that would be my additional points besides of the others just mentioned.
Thank you, Dr. Heinrich. Now we have the key factors in mind. So let's move forward to take a look at some of the new policies in Hong Kong in terms of the PEVC space and how it would be able to attract family office to come over to Hong Kong. So my next question is the LPF, Limited Partnership Fund regime, and the associated carry interest concessions, which hopefully will aim to attract more private capital, including from family office to Hong Kong for investment. So apart from limited partnership fund regime, I think Rich Jing would be able to explain a bit more because he's the chairman of the LPF Association Hong Kong. So perhaps Jing, if you don't mind, to share with us, from the latest LPF regime perspective.
Thanks, Dixon. I don't know whether anyone here is the first time to hear this terms LPF. Anyone? So it seems everyone at least heard this name. So limited partnership structure. So this was the new regime launched about 12 months, 14 months, I think, 40 months ago. So in the last 14 months, I think there has been over 365 LPF set up. And I am personally involved in setup for more than 100 of them. So this new regime, and together with the carry interest concession, which took effect in May this year, so I think these two regimes are the most hottest topic in the PE industry, in the fund management industry in last year in Hong Kong, and also attract a lot of attentions from not only regional fund managers but global fund managers as well. Because family office is actually very closely connected to private equity and alternative investment management. And the reports and all the surveys show that family office are getting more and more interested in investing in private equity industry. So I think the availability and the launch of those LPF regime and also the launch of the carry interest tax concession definitely increase the attractiveness of Hong Kong. And besides the LPF, there are also other fund options, like local Hong Kong fund options like OFC structures, which was rolled out like 3 years ago by SFC, and the Hong Kong government also have a policy to subsidize the launch or the redomiciliation of the fund as OFC in Hong Kong. So, and you can see the numbers like after the policy was announced in May, in just last 5 months, the number of OFC set up has been doubled, basically. So we are quite optimistic about the future of this asset class in Hong Kong.
Thank you, Jing. Actually, I concur with you. In terms of the number, we've got over 360 over the last 14 months, which is a very significant growth. And I think on average, it means 1 day each, there's one registration on average, so which is a very positive news. So I think I need to ask Dennis, because you're a family office operator, right? So you're running the family office, single family office. What do you think? Do you think the LPF helps, would be what are the key drivers that would help attract more family office, or help the PEVC space? So please share your views.
Yeah, I think those two factors are some of the factors that attract family offices to where they want to be. I think the most important thing, it's at the end of the day, family office, a big part of it is asset management. So asset management is about legal structure and also the investment aspect of it, both of which involves talent. So anything that draws talent, that incentivizes them to come would be very helpful. I think these policies are definitely helpful from an absolute, and also from a relative basis, because other jurisdictions are setting this up. If we don't do it, somebody else will, and then talent will go where the capital is. So I think it's very important. But other factors to consider, obviously, is also the international aspect of Hong Kong. I hope that things will go back to normal soon, and then that aspect of Hong Kong can be kind of more exemplified going forward.
Thank you. I think Danny has highlighted the capital markets, which is obviously very robust and also very strong in Hong Kong. So we now understand more on the LPF and the tax transaction and also the potential redomiciliation. Now we moved to another topic, which is ESG. So what are the reasons for the family office growing interest in impact investing and also ESG investment opportunities? Can some of our speakers share with us the recent ESG development? What are the market opportunities in Hong Kong? Perhaps from a family office association perspective, Simon, if you can share with us your view on the ESG investment opportunities.
Yeah, thank you. Everybody, I think, in the room knows ESG stands for environmental, social, and governance. I think there has been a significant increase of attention to ESG. Basically, I think the policy itself needs to be enhanced from a family office association perspective. But why ESG is going to be more impactful to investment? Think about it. If you are going, just example, if you are going to have an investment on oil refinery, okay? Is it the coming environmental impact on solar panel? Solar energy is going to impact to your investment, right? So what about electric car? Is it going to shape your investment in the future? If that is the case, how this ESG is going to impact your investment again and return? Some of the as I mentioned before, some of the non-financial factors may impact your investment. That will be related to the value creation of your investment in the future. You're not going to invest for 1 year, 2 years. From a family perspective, family office perspective, you may be invest for 5 to 10 years of your medium to long-term investment. So ESG will become into the impact of the return and value creation of your investment. So I think that is something need to be reconsidered. Again, ESG has been a hot topic, But is there any policy or common standard globally? I think we need to think about it. Different companies or family office, they have their standard to create their own rating on their own ESG reports. But I think that is something we need to reconsider and rethink. What is the global standard for ESG so that we can create family office for investment future can have a standard. So I think this is from a family office perspective.
Thank you, Simon. And for the information, actually, I spoke on a similar subject earlier this week on ESG. So my understanding from, there are a lot of government agencies like Hong Kong MA, Stock Exchange. They also, have their own steering group called STAGE, as well as the Sustainable Finance Steering Group, which also have, these sort of objectives, helping to promote green and also green finance, green bond, these sort of financings. So, Dr. Heinrich, what's your view, in terms of family office growing interest in ESG and impact investing opportunities? Can you share with us some of your global perspective on ESG developments?
Well, I can speak especially about Europe. We are studying family offices that have set up their own investments vehicle, and we studied over 400, and it's clear that there is growth. So in the last 2 years, it has risen by 10%. So now 34% of our surveyed or studied, better said, family office investment firms have clear ESG implementation publicized, so 34%, whereas impact investing only grew a little bit and is now by 7%. So yes, it's growing, and as we study them, we clearly see one that it's part of the DNA because of the heritage values of being responsible owners. They're looking at their employees, suppliers, customers, giving back to the community, and so on. They have that a bit in their genes. So therefore, we think actually it will become increasingly normal, a normal part of any investment activity. The only question is how you express it and how you measure it. And then I think the second most important finding we had, and that was, confirmed by the interviews we did, personal interviews. So there's one 5th generation Italian CEO of a listed vehicle controlled by the family, Italmobiliare Presenti he's called, and he said that actually the ESG compliance will increase the value of portfolio companies. And it is a major, quote, strategic lever for any company. So they see it actually as a must and as a value driver. And then, it's also a bit, so one, I think it's clear that it will become the new normal. And then the second is that it's often difficult to divide or to have dividing lines between what is a tech, what is a sustainable, what is an impact investing. So that these lines will become increasingly blurred. But as I said, I think as Carlo Presenti said, it's actually a major strategic lever.
Thank you, Dr. Heinrich. Since you talk about the impact investing and ESG from a geographical perspective, because right now you are based in Spain, and I understand that you have researched with over 600 European family office. So can you also share with us what are the key findings out of your recent research with our participants here?
Yeah, so what we actually did is we looked into family offices that set up an own vehicle to invest in private equity. So pretty much what the conference is all about. But we only looked into family offices that have a professional team in a specific setup, which we called a family investment company. And so these family investment companies are owning and controlling actively businesses and investing in them. And so we have 100 named family groups, 40 charts, and so on and so on. in our report. And so that is based in Europe. And it was interesting because there were I'm saying all of that so that you understand the setting so that I can then explain the findings. And we had a few that had very strong relations to Asia. Some of them even had their offices in Asia, like Jepsen in Hong Kong, Swire, who are in Hong Kong, but also in London, of course, Grim in Thailand. So, and we are now very interested, and if somebody wants to support that, to do the same study in Asia. And the findings from those specialized, as we call them, FIGs, right, family investment companies, there are 3 attributes. We call them the 3 S's. So the structure is very clear, a central holding with a portfolio approach, which is controlled and owned by the family. So there's a very clear professional structural setup to run these investment activities. The strategy, second, is it's active involvement, active ownership, clearly long-term. That you would expect. What was very interesting is there's high liquidity and low leverage in comparison to other private equity investors. And it's clearly also value-driven, as you would expect. And then additionally, and as a clear differentiator to other non-family private equity investors, they leverage their family history. So they use stories, that is, to implement the values and the we've just heard 5th generation history they have, and provide the companies with role models. So that is clearly the family touch, which makes them probably better, in my view. We have difficulties, of course, getting the results, better private equity investors. And then they are also have a different mindset than families and private equity investors who are not family members or family-controlled vehicles. And that is, they are not sentimentalizing their assets. So they don't hold on to traditional family businesses. So they sell and buy, and they have a regular intervention. So there's flexibility there. They are also very focused in serving the family and the businesses by supporting both. So there is obviously a clear mission there. And as said already, the mindset is also to use the history to shape the future. So we call that farming. And then very important to the family is, as you have to reinvent yourself. So, you spoke, there are many first generations now in your part of the world. Here we have several generations. It is fostering the entrepreneurial mindset. So you have family as an investor helps to foster this entrepreneurial mindset as you have to reinvent the family regularly. And what we also did, and obviously that's in the report, you are more than welcome to get it. We have then clustered those and find out that there are continuous family investment companies. So that has been family businesses that have been set up from the start as a family business investment company. So like Wehrhahn in Germany, very famous name. Or you have, a bespoke one that was specifically set up and so on. So we have grouped them and we try to understand what these private equity investing families have in common and try to find their specific issues. Maybe as a final comment, we had 2 core beliefs before we started, and they got confirmed, and that is this investment companies or professional setup to do private equity beyond the normal family offices, because you need different people, can support multi-generation entrepreneurship and therefore help families in business survival and the necessary changes and survive crises, which we have seen in the current pandemic. So that's one thing. So I think this setup really helps the families to be long-lasting. And what we also are very convinced now is that family businesses as such, so normal family businesses, can learn a lot from the mindsets and the S's we presented from these family investment companies, these special vehicles firms, and especially during such a crisis as we had just had. That's all from here, from Europe, so to speak.
Thank you, Dr. Heinrich, for your sharing on the family office, the findings of your research report. Now let's take a look at the Hong Kong startup ecosystems. Hong Kong's startup ecosystem, the community has been growing rapidly during the last few years. And what is the role of family office in supporting the ecosystem in startup? In particular, some of the family offices interested in investing, like fintech or biotech companies. So perhaps this question, I think, would be best answered by Danny as the family office investor. Danny.
Yeah, so I actually do think family offices made a pretty big impact on startups ecosystem in general, and not just in Hong Kong, I would say globally. And that's in two ways. I think one is families are actually much more interested in investing in startups because buying stocks or doing very large transactions is not a cup of tea for everyone. Sometimes startups are much more accessible for the family members to get to. So a lot of people are actually interested in supporting the early stage companies. I think second is as an LP to a lot of venture capital funds, I think family offices tend to be more willing to put a bit more money into venture capital. For us, for example, if we wanted to access European or US venture, we typically use funds in places or sectors that we don't know as well. So I think that was the second part. I think the third part is sometimes we even seed fund managers. So I think that's something that institutional capital don't really do. The family offices are much more willing to seed fund managers to start. It's usually a win-win situation. One of our most successful investments is actually seeding a manager in the US, and the return has been quite good, both in terms of increase in AUM for the manager and also the increase in value for the overall entity. So I think family offices, especially I think over the last 10 years, I would say, played a pretty big role in the startup ecosystem globally.
Thank you, Danny. Dr. Heinrich, from an academic point of view, how about your research report? Did it mention about anything in terms of family office supporting the startup ecosystem, or what's your view?
Yes, so indeed, 50% of our over 400 surveyed, studied family investment companies actually did actively invest in startups or early stage companies, and clearly focusing on technology change and digital disruption. So that has been very strong, we found. And one has to say, obviously, it's a complicated area to invest in. You need, very good people. There are very few venture capital funds actually make the returns we're always hearing. There are a lot of venture capital funds that are not so successful, and the same holds for families. So it's a complicated area to invest in. For that reason, what we have seen, because we drilled a bit down what they were actually doing, so some of the more sophisticated one did what we call some sort of disrupt tech support unit, which is within this investment company. It has specific units or division to support the investee companies in response to technology change and digital disruption. So it means that they actually tried to help the companies to become good in the technology change and this digital disruption, and thereby becoming very knowledgeable about the sector and being good or better investors in that area. And as mentioned before, I think the fund to invest in funds is a wise decision if you can get into the good funds. It's not about the top quartiles, it's really about the top 10%. And there were the first time funds mentioned, that's very true. The first time, if you look at the statistics, first time funds outperform later funds. So if you can get into the right ones in the beginning, that's very good. And obviously, the most challenging thing is to take direct stakes in these disrupt tech businesses, which is, as I said, done. We don't know the results. So it's obviously high fun. It's high risk. Whether it's high return, has to be seen.
Thank you, Dr. Heinrich. And we can see that family office have now become an important part of the startup ecosystem. So I think this is a very important aspect because family office is not just one part, but also across different sectors, different pillars. So we only have 5 minutes left. As part of the program, we need to allow 5 minutes for questions. And on the floor, if there are any questions, please feel free to ask. Anyone, please raise your hand. We have experts here.
Hi. Thank you very much for your sharing. I would like to ask a little bit more, how do you see local small startups compared with very mature funds? Because as a startup with a very limited amount of track record or historical performance, like 2 years, 3 years, how would we be able to demonstrate to family offices like you that we can perform as well as the other big fund, big names? And would there be anything that would help you understand more about us as a startup, as AI investment companies? Thank you very much.
I think Danny would be the best person to answer this question.
Yeah, I think it's, look, I assume when you say bigger ones, you mean the bigger kind of unicorns and the type of companies?
Or a little bit like very traditional funds. For example, like the big names like BlackRock, things like that, because we are all in the same sort of competition, that we are all trying to drive return for the family offices. So regardless of what the strategies are, after all, it's all about the performance.
I see. Okay, so you're talking about from a return perspective, how that, okay. So well, the short answer is that we have allocations. So I want part of the assets that will, return more stable type of returns. So I would say buyout funds typically generate lower returns in terms of multiples of money, but fairly steady. The risk of losing your money is low. And you probably get your money back, in 3, 4, 5 years. Whereas I think venture capital funds or investing in startups, the multiple sometimes could be high, but it's a very long duration. It takes 5, maybe even 10, if not longer, to get your money back. So the profile is very different. So we have to manage to, a certain percentage of our AUM that goes into the higher risk assets versus, probably how much we want into the later stage, like BlackRock, Blackstone type of funds. But they all serve a different purpose and a function. Our experience is, if you, I think, Dr. Heinrich said it right. If you focus on the right investments, VC can certainly outperform. And then I think the last 10 years or 5 years, VC has outperformed quite a bit. But if you drag it over a 20-year time frame, I would say from a risk-reward basis, the later funds are probably overall still kind of do better overall for family offices or investors in general.
Thank you very much.
Yes, sir.
Hi, guys. Hello? Hello? Question, cryptos. Family office going into cryptos much? And what do you think of cryptos in general? Bitcoin, end of the year.
Yeah, so we've done pretty well with that. But I think I think buying coins is probably not, in my personal opinion, I would say not a very sustainable way of investing in crypto. I would say I like blockchain much better than crypto, what it's worth, because I think there's a lot of infrastructure plays that are much more interesting and sustainable. If you look at the internet, back 20 years ago when I started doing investing, there are lots of people who invested in portals and all these kind of things, right? But look at what survived, right? So it's a lesson that you can learn. History does repeat itself. If people call this Web 3.0, then let's think about what are the tools that will sustain the blockchain, sustain the cryptocurrencies, right? Not necessarily the cryptocurrency itself. If you want quick money, that's probably a way to do it. But we're not looking for a quick buck. I think it's actually difficult to do that consistently. We try to look for things that has duration, that has real value in this entire value chain of blockchain and cryptocurrency.
I give a comment on here. Actually, I think more family office has been exploring crypto, especially in the NFT sector, blockchain sector. There's a research saying that family office has increasing 15% investing in crypto with a very high return. And among the family office, potentially there are 45% will be investing in the crypto sector. So especially the NFT these days. So I think this is something interesting.
I think in the interest of time, because we are actually over the required time. So if you give another 1 hour, we can still talk more, given the expert here familiar with the industry. So thank you very much, speakers, panelists, as well as the audience today. Thank you so much for your time.